Good morning, it's 10:15 a.m. Eastern Time, Thursday, January 2nd. This is the Dairy Portion Report, and this is Richard Pawson. Let's take a look at our daily continuous chart, still operating off the January, but it should actually be rolling here pretty soon to May, and that's going to cause a sudden drop on the charts, so we'll probably have to start focusing on the January and May individually until we can kind of ride out the rollover distortion. But the interesting thing is, even though that will cause a sudden drop of this chart, the model's already looking for a top here and preparing for this particular drop. Okay, in other words, they can kind of coincide, and it would be just coincidence. Okay, let's take a look at what we're the intermediate L1 cycle trend. The L1 cycle is basically a semi-cycle. It's how we do business. Okay, a little less than semi-annual to a little more than semi-annual. That cycle will break into 2 or 3 L2 cycles, and they are basically quarterly. And that means that's how we're doing business on a quarterly basis. Okay. Now, these are the most important cycles we follow during the year, the most important trends. Okay. So what we have is that milk rallied. Now, remember, we're trying to stay 3 months out into the future. So this is more about the futures market than the cash market. It's really not necessarily about today's market as much as what hedgers are trading and speculators are trading for the future of milk. Okay, and then we roll 30 days in advance, but we're trying to stay out 3 or 4 months, and we only have 3 contracts that we follow during the month for this particular chart. At any rate, what we have is an L2 cycle uptrend, then an L2 cycle downtrend, and there's your L2 cycle bottom to bottom. Now we have an L2 cycle uptrend, and there will be, or should be, an L2 cycle downtrend for the next 2 L2 cycle bottom to bottom. Now put it all together and we have an L1 cycle uptrend. So therefore the L2 cycle creates the largest ratcheting process within it. 2 legs up, 1 leg down, creates the largest correction or some kind of complication, slowdown, running correction, consolidation. Okay, it can come in many different forms and various volatilities, and it doesn't always work. At any rate, what we can see is that we're now looking for this L1 top. We have drawn a time zone here, anticipating a top. Now this time zone is actually a little bit off the mark of what we want to offer. We want to actually move this out. Okay, closer to actually January 27th for this time zone, right there. And even though we're allowing $21, that seems a bit ridiculous to me. I think it's going to top out on the low side of this time zone. I'm considering no more than 20. And I'm also considering an early top. So the L1 trend goes up into this time zone, comes down out of it. The L2 trend up into this time zone, comes down out of it. So it's a setup for a top looking for a sell signal. Now, inside of these trends are short-term cycles. I'm tracing off bottom to bottom. They are the L3 cycles. It's how we do business during a month. It's the biggest moves during the month, largest amount of supply and demand during that month. And they can become quite volatile in that you may have an L1 or L2 due to top and bottom, and it creates some kind of more volatile occurrence. All right, now, the L3 cycles, of course, have uptrends, downtrends as well. So the L3s are really a ratcheting process inside the L2 and the L1 uptrends. So now let's talk more short term. We think we've seen a recent peak for the L3 cycle, so now we have to draw, or we have to move the time zone for the next. We're allowed to move time zones as they're just a tool to help us find a top or bottom. When we found it, we move it to the next one. We don't leave it for past reference. Now inside the time zone, we draw a window reversal. And in recent weeks, we've decided to revise it. Instead of drawing window reversal on all our daily, weekly, monthly charts, we're leaning more towards just drawing them on the daily charts and primarily for the L3, because we're going to use that L3 to time those larger cycle trends. Okay, and we'll leave those windows reversals in place. We're allowed to adjust them inside the time zone, move them around. But when price touches it, or maybe within 1 or 2 days of it, we lock them in place. But we're allowed to then expand them, contract them. We just can't move them time-wise, okay? And if it gets out of hand, we think it's a little too volatile or we're a little too off the mark, we'll freeze it in place, but we're then allowed to draw a second or even third one inside of a time zone. Strike 1, 2, and 3, in other words. Okay, so now we've moved the time zone forward, and it's inside the time zone for the larger cyclical top. So it's saying it should at least trade into the 1940s, at least recover there, just bump its head as a truncated top, meaning a lower high, and then come down. And we do have to worry what's going to happen with this rollover. I'm a little suspicious. We roll over and see a drop for this chart as if we missed the top, but when we look at the January and May individual contracts, they're probably going to rally up for this truncated top and then decline, or they're even going to rally to a new high for the move, okay? And then they're going to decline, and that'll be the true top, even though on this particular chart it may have topped sooner than we think, okay? So at any rate, we're looking for maybe even as high as around 2025. And again, this is currently basis to Jan, and again, when we roll to May, we're going to have an automatic drop here, and we'll deal with that over time and show you the other contracts to give you some additional information. But we think it can rally now until January 6th to January 15th. I favor a top next week. It should rally into next week. So we need trade over Tuesday's high. We need trade over 1945, okay? And I think it's going to trade over 1972, but the problem is if the chart rolls over sooner, we'll have to prove that on the January by itself, not this particular chart. 5-day stochastic has come down oversold, narrowing range as if it could easily turn up and trigger a buy signal, okay? Notice that we drew a time zone here for bottom, and you can see the market bottomed out a little bit later. We drew a window reversal and then actually got a little crazy and used discretion, said we think it may bottom a day later, but it turns out probably 2 days. But again, we got to see what we get for price action today and this week. So we're a little bit off the mark for forecasting that, but we said probably the worst case scenario is it trades back to this previous where we tried to call an L3 top and we were early. But that can now be a support level, maybe around a 1910 January. So again, a little hesitation here, but an L3 bottom should lead to a short-term rally for the next leg higher. Now, we probably should then call an L1 top in place, and we're going to have to because we're going to roll to May, but the point is we'll have to come in with some additional information for you on the Jan and May individually and call a later top. I guess what I'm getting at is this could rally into this L3 top, pull back for an L3 bottom, not pull back much at all, and then rally into late January for another L3 top. So we have two opportunities to actually find this L1 top, unfortunately. So we are eligible for at least strike one, maybe even strike two if something else goes wrong. But at any rate, that's our best forecast, is a rally here, a blip up, and then we're going to see an L1 top. Now, this is the weekly chart, and here's your L2 cycle, bottom to bottom. It should pull down into L2 cycle, but it's also pulled back into an L1 cycle bottom, and we're drawing a time zone for January 13th to February 10th, okay? We're allowing all the way down here to low 18, so this could be a dramatic decline actually, but we're still going to remain long-term bullish and think it'll be higher later in the year, okay? So we'll look at that in a moment. So let's go back here to this daily chart then. Once we think the L1 top's in place, we're going to take this time zone and move it down and out to forecast an L1 bottom. Also keep in mind 200-day averages, 40-day average is very important for commodities, 100-day averages, something else to watch for various price levels. Okay, so again, the continuous chart may have already topped because it's going to be rolling over to May, but I don't believe that's the true top. We'll then watch the individual contracts, and I anticipate another run higher into this L1 top. All right, let's move on to the cheese market because we've been talking of just the futures, and the cheese is going to probably tell us a little something different because it's really dealing with the cash market, today's market. But it's not that different, is it? We're looking for an L2 top, a different kind of top. So what this is forecasting is the milk futures people might become far more bearish than the cheese people, because if this is truly an L2, it's higher than an L1. That's an automatic forecast that in February, March, early April, we should see same to still higher price and into an L1 top, and ideally higher, okay? But it is due for a setback. The holiday demand's over. We should see a bit of a setback, but we can also get Super Bowl demand. Put it right back up there. It is overbought in a 5-week stochastic. The model is warning cheese is overvalued, overbought. We've had our year-end holiday demand run. It is time for a pullback into an L2 bottom, but this particular forecast is saying it may be the milk futures get carried away and are more bearish than the cheese. But it's also possible the milk futures really don't respond to this L1 top, that they don't turn out to be all that bearish. Okay, now let's take a look at the long-term forecast for cheese. Those L1 cycles build into larger, long-term 3-year cycles that can create uptrends lasting as little as 5 months, which probably means you're in a much larger bear market, like a 9-year cycle, bear market for the decade. But ideally, they're probably going to be longer than that, and it can go as long as like 27 months, okay? So basically the idea is you're up 1 year, down the next year, but it's really more like 1.5 years, something like that. So in other words, up 1 or 2 years and down the opposite, 2 to 1 years. Okay, long-term 3-year cycle top, bear market, bull market, but choppy, broken up, difficult to work with, but it was a good bull market nevertheless. Didn't pay to sell long-term. Bear market didn't last that long. These are probably signs we're in much larger 9-year, decade kind of bullish cycles, in fact. And we are forecasting the economy to grow to 2017, 2019. Same for global economies. We're forecasting commodities and stock market to rally to 2017, 2019. At any rate, we've got a bull market going here. And again, it's broken up, choppy, sloppy like the previous one. But it's looking fine right now. Now, it may set back quite a bit here pretty quick just because of the getting over the holiday demand. But we think it's going to rally at least to this trend line, at least up to around 206 level. We think it can challenge this old high in 2011 around 215.5. It may even rally to a new record high, may even rally all the way to 240. And what of all the farm bill talk, what else can go right or wrong there? Long term, it is overbought, but we think it's going to be overbought for a very long time. We're not paying that much attention to it. We think it's ahead of the game as far as true valuation, meaning we do not really see it overvalued long term. So we're still long term bullish. Now, that suggests to us that cheese and milk can do quite well in 2014 here, at least for the first half of 2014, and will probably outperform butter, which means butter and class 4 milk might be the slackers, but they can still rally. And here we have a bear market. It's a bull market, not working very well, by the way. And yes, it's already due for a top. We just do not believe it. We think the top is later, and it can top out as late as January 2015, believe it or not. It's minimum upside objective. We do not believe that's the correct objective. It could be as bullish as $2.16 a pound. I kind of doubt that as well. I think we got it pegged right about right, midsummer to early fall months, and 180s, maybe up to 2s, and that's probably it for 2014. Okay, in future, we'll take a look at in future reports. We'll update you in terms of the milk production in this country, and then we'll take a look at some other economic factors. And we'll close now with the spot chart of milk, which should just resemble the cash market, and it's just fascinating. Right around May, June, on into August, they were very bearish. The farther out milk futures sold them. We were against it, and look at that, the cash market for the most part, we were right. And then the milk futures jumped on board and have been bullish right along with the cash market and cheese market. Thank you.